Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 7th of November 2019. So, welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD Research tab here, which you can always check out on a daily basis. And I believe you can find a lot of useful stuff here because we update it on a update it every day. So yeah, feel free to visit us, check us out here. But for now, guys, let's jump into the charts. Now, the first one I want to touch on here, and that's silver. Now, I talked about silver yesterday in my trader's tea time, and basically what I was saying that we need to keep an eye on this upside line here. And during the tea time, during my tea time video, the commodity, the precious metal, was breaking this upside line here, taken from the low of the 1st of October. But what I was saying that we needed to see a close below this, a close at least of a 4-hour candle below this level here, the upside line, and below this 17.51 zone. We didn't get that. We did get a break, but we never got a close. So as you can see, even the daily candle kind of closed above this upside line. So in a way, this still kind of gives a bit of hope here for the buyer, or sorry, for the sellers, because we're not far from this upside line, because in a way it could sharply move lower again and drift to the downside, break all this area. But again, in a way, until that break happens, we cannot really talk about the downside here. So, and in other words, as well, we started seeing a bit of the equity markets were slightly on the shaky grounds yesterday. So excuse me. So in a way, if the equity markets are kind of starting slowly, maybe, or at least in the short run, starting to move away from the risk-on environment, then we could see the precious metals picking up the pace again and pushing higher. But again, at this point, it's too close. It's very tricky, I would say. So that's why we're just going to focus mainly on some of our key breakout levels. So basically, with the downside, still the same idea remains. If we get a break again below the upside line, below this 17.51 zone, and we get at least a close at least of a 4-hour candle, then we will start considering further declines. We will aim for the 17.15 level, which is marked by the low of the 16th of October, and further declines could be possible as well if this area here fails to withhold the bears. So, but if the commodity decides to reverse back to the upside here, for us to start considering higher levels again, well, we will only do that only after we see a push above the 17.91 zone, because until then, all this territory could be a very tricky one, I would say, and we could see this one moving a little bit higher, but maybe getting a hold up near these EMAs and then reversing back down again. So that's why we'll play it safe and wait for a 17.91 level break here before examining slightly higher levels. US oil. So WTI oil, haven't looked at this one for quite a while, and basically the same idea remains. If you remember, last time I've looked at this one, we were rebounding nicely from the lower side of this rising channel formation. Now, I talked about this a lot, and basically I was telling you guys to keep a close eye on some of the levels. Initially, you should have been looking at the 56.80, oh sorry, 56.90 zone. We managed to hit that, break that, and you can see that well, the commodity violated it several times. So in a way, this level no longer is kind of valid, to be honest. And what we're going to do here is we're going to mark this high that we reached yesterday, and that's roughly near the 57.81 zone, and that was not far from the upper bound of the rising channel. So for now, everything's kind of looking quite nice here. Everything's still moving inside this rising channel formation. For now, from the very short-term perspective, given that we saw a push, a new high for this week, but then at the same time it quickly reversed back to the downside and fell down sharply and closed the day in the negative territory. In a way, and the way the price structure is kind of building up right now here, it's kind of leaning more towards the downside, to be honest, and we could see a bit of a move lower here. We could see maybe a push back down, maybe to test the 55.55 zone here, which is marked by the high of the 31st of October, or even this lower side of the rising channel. So of course, for now, the way everything's kind of shaping up right now here, it seems that the commodity could drift lower again. So initially, like I said, we'll target the 55.55 zone. And then maybe the lower side of this rising channel. In case this decides to push higher, and let's say drifts above the 56.80 zone, which is roughly around today's pivot, then we'll aim for higher levels. We'll target the high of yesterday near the 57.81, or even the upper side of this rising channel. So for now, in terms of the upside, like I said, keep your eyes for today only. Keep your eyes on the pivot, which is around the 56.80 zone. A nice good push above this could in a way lead the commodity back up here towards the highs of yesterday, or even a little bit further. But for now, looking at the picture here, as long as it remains below the pivot line here, and below the 20 SMA here inside the Bollinger Bands, then there is a likelihood for this one to drift back to the downside. So let's keep an eye on this one. AUDUSD. I talked about this one yesterday as well, and what I was saying that we needed to see a close below the upside line. We got that, but we didn't quite get the close below the 0.6873 zone. So we saw the pair kind of dropping lower, breaking that level, but then quickly reversing back to the upside and kind of staying and closing a daily candle above it. So you can see that this morning the pair continues to drift lower, and now today it's kind of comfortably breaking this 0.6873 level. So everything's kind of leaning more towards the downside here. You can see that we did get a bit of retracement already, and it's currently kind of balancing near the 0.6873. So we're going to keep an eye on this one. If it continues to hold, then, well, we could see another round of selling and potential. And to be honest, this is what we're targeting right now. We're probably leaning more towards the downside, unless something, some sort of headline comes out that will push the pair higher. But for us to, let's say here right now, from the technical side, for us to consider the upside, well, ideally we would like to see a push back above the 0.69 level and back above this upside line here. And in a way, you could also mark this little high that we got yesterday. That's roughly around the 0.690708 zone. So just for that extra confirmation, a push above this level could open the path back up here towards the higher levels. Initially, we'll target the 0.6930 zone, but if that fails to withhold, then yep, higher levels could be possible. But at this point in time, it seems that it's struggling with the 0.6873. If it continues to do that, then we could see another round of selling, potentially aiming for the 0.6845 today, maybe even the 200 EMA on the 4-hour chart here. But if that doesn't hold, both of these don't hold, then we could see a test of this upside support line, because don't forget that overall we're still within an uptrend. So from the shorter term perspective, yes, we are declining, but from the kind of more of a medium term perspective, or even actually, well, you could actually also class this as a short term, but this is a short term upside support line. So, but again, in that case, a very, very short-term perspective. So from the very, very short-term perspective, yes, we are in a bit of a decline here. Maybe some could say that this is even a correction before another possible leg of buying. But for now, it's kind of really we're struggling to find a good entry for a buy here. So everything's kind of leaning towards the downside for now. But again, the downside could be limited due to this upside support line taken from the low of the 2nd of October. So that's why, guys, be very careful here. Yes, this move lower could be seen as a correction, as a temporary correction. But for now, it's really difficult to kind of establish here where to kind of, where, let's say, or if this can reverse back to the upside or not. But that's why we've got this level here, just for that extra confirmation, or let's say level to where we could get comfortable with slightly higher levels. So for now, guys, keep your eyes on this one. But again, from the very, very short term perspective, it is leaning more towards the downside, and we do have some interesting levels here for a quick test. USD CAD. I've looked at this one yesterday as well, and this is what I was saying, that we needed to see a close above the 1.3185 zone. We got that, and we got a daily close above that. So everything's kind of looking nicely here for USD CAD. So I was saying to you guys, don't rush into this. First, let's get that confirmation. So for now, everything seems to be quite interesting here for USD CAD. So in a way, it increases the chances of a further move higher, increases the chances of a possible move towards our target near the 1.3240 zone here that I've got. We're not going to drag this one too much to the upside. If it breaks it, wonderful. That's wonderful. Yes, we'll aim for higher levels, but we'll keep it short and simple. For now, this is what we're going to be targeting near the level near the 1.3240, and then we'll take it from there. If the pair suddenly drops back below this downside line, well, I mean, this is not looking good for USD CAD in that case, and we could see this one drifting further down here. We could even maybe revisit the 1.31 zone, but again, let's wait and see. For now, it's leaning more towards the upside. In case this suddenly drops back below this downside line, then yes, we will consider a possible test of the 1.31 zone. GBPAUD, quick mentioning of this, still the same game plan remains as I looked at this one yesterday. We are within the falling wedge here. Of course, these patterns tend to break to the upside. But we cannot really talk about the upside yet until we see a nice close above the 1.8736 zone here, which is marked by the high of the 4th of November, or in other words, the highest point of this week. If we get a push above that, and we do get a close above that, then yep, that's wonderful, good news for the buyers, and we could see the pair drifting further north. But for now, as long as it remains in this falling wedge pattern, we cannot really talk about anything, and even the downside, we need to be very careful with the downside. That's why I've got this level right here. So we will consider lower areas only if we see a drop below the 1.85 territory. So basically roughly around here. So if we do get a drop below this, then yep, this would of course this would show that the pair has exited the falling wedge through the lower side, and in kind of this way increasing the chances of a further drift lower. But for that extra confirmation, a drop below the 1.85 could do the trick here, and we could see a move towards this upside support line taken from the low of the 30th of July. So that's why, guys, for now, keep your eyes on this one. Again, overall, we are within an uptrend, but from the short-term perspective, and this is where I can comfortably say from the short-term perspective, because from the medium-term perspective, we are kind of moving higher, but from the short-term perspective, there is a bit of a decline here, which could still be classed as a temporary correction. So let's keep an eye on this one. EURJPY. I've talked about this one as well yesterday, and just wanted to kind of update you on what's happening here. Now, it's quite interesting here as I was talking about yesterday about this little range here that we got ourselves in right now, and the 100 between the 120.36 and the 121.38 zone on the upside, or in a way you could round it up towards the 40. But what we needed here, it was a break through one of the levels. So as you can see, the pair drifted lower and broke the lower side of this range in a way, this way kind of increasing its probability of a move, further move down. Now initially we're gonna target only the 200 EMA here on the 4-hour chart, but slightly below that we do have this 119.71 zone, which also could play out nicely as a nice good area of support. Or our other target, a slightly better target, is around the 119.05 zone, so which marks the low of the 15th of October. Again, be very careful with this one, because if, let's say, suddenly this decides to reverse back to the upside, and to be honest, this is an early morning and we are already quite overstretched here to the downside, even from today's perspective. So that's why be very careful on this one, guys. I mean, if it drifts lower, that's wonderful, but then we could see a bit of a rebound, and probably the sweet spot could be if we see this one drifting further down, let's say, and then reversing back to the upside, and then struggling, let's say, to overcome this barrier right here, the 120.36 zone, roughly around there. Then we could see another round of selling, potentially drifting, where EURJPY could potentially drift further down. So that's why, for now, again, like I said, it's quite overstretched already to the downside, and this is a very early morning. So in a way, we could see, of course, we could still see a further decline here, but don't forget about a bit of correction or something like that. But again, as long as it stays below this level here, below the lower side of the range, then yep, we will continue targeting the downside. So that's why I'm kind of leaning more towards this idea here, where we could see a bit more declines right now. Let's say this one drifting further south, maybe testing the 200 EMA, rebounding back up. Then if it struggles to overcome this lower side of the range, then this could present itself as a nice maybe possible trade to the downside. Let's keep it that way. In terms of the upside, very conservative approach here. We're waiting for a push above the upper bound of the range, and only then we will consider higher levels. Here, we're going to remain neutral and just continue observing the price action. And euro dollar. So I talked about this yesterday, and basically what I was saying, that in order for us to consider further declines, we need to see a break below the 1.1063. We are getting that, and again, for now, you can see that the pair is kind of balancing near this area here. So for now, we're still bearish. We will target the 1.1021 zone. We'll see how it performs around there. But we'll move on this one slowly, because at any point this could reverse back to the upside and then push higher. So for now, and previously I talked about this level right here, the 1.1140 zone, as a potential kind of breakout to the upside. So of course this level still remains for us as an important one, but in order not to miss, let's say, for example, any kind of any possible moves here, what we could lower our potential breakout point here towards the 1.11 zone. This way, a nice good pop above that 1.1103, something like that. A nice good pop above it would also place the rate above this little tentative downside resistance line, and then yep, it could increase the chances of a move higher. So for those who are more on the cautious side, you could just wait for a push above the 1.1140 and then target the upside. But for those who are more excited or excited, who are more risky, then you could start looking at higher levels here. The only problem here is that we may get some false breakouts, and we've seen that happening many times, guys. So that's why it's very important to have your stop loss in place here, so or anywhere in general. So if we get a push above this area here, above the 1.1103 and this downside resistance line, yes, it could increase the chances of a further move higher, but keep your stop loss in place because, again, this suddenly could reverse back down and could wipe you out. So be very careful with this one. Don't kind of respect the market, let's put it that way. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me later on at my traders tea time, as always, that's 14:15 GMT. We'll have a look at some of these instruments again. We'll see how some of them performed, and yeah, we'll take it from there. Once again, thank you very much for joining in. Have a safe day. Have a safe trading day. Yep, and I'll see you later. Thank you very much, and bye-bye.